Welcome to the latest Motley Fool scoreboard. I'm Anand Shakamlin. We've got longtime fools Dan Kaplinger and Toby Bordelon giving a 1 to 10 rating to a company that'll probably never get my money, Sonos, ticker symbol SONO. Talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Dan's at a 6, Toby, you're at a 7.
Yeah, they have some of my money, Anon, and I think the brand is very strong still, all things considered, though recent actions by former management have certainly hurt it a bit. The reputation for premium products still holds. They invented the category, really, of multi-room connected streaming audio hardware. They have a history of innovation, but the missteps with that app update recently mean they have a lot of work they need to do to regain customer trust.
Yeah, it's just really hard for me to separate out the business from the financials. For sure, the products are very impressive. If you are looking for home entertainment, if you're looking for a quality system, then they will get you set up. It's easy to love the tech. It's just not enough. And so, seeing all the factors that are hitting the business lately, it just kind of shows you that there is some vulnerability there. And Sonos needs to pick itself up off the mat, figure out how to go forward in order to get that business purring again, get it back moving in the right direction.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Dan's at a 4, Toby, you're at a 6.
Yeah, it's hard to rate management right now because we got a new CEO. New CEO Tom Conrad's only been in the job about a month, and for now he's still just the interim CEO as the company searches for a permanent replacement. Longtime CEO Patrick Spence, who took this company public, resigned last month after that disastrous app rollout. Other senior managers have left recently. I think probably not entirely of their own accord. So it's hard to give a sense here if we don't even know who the CEO is going to be, right? But 6 is my reflection, both of past management and the board's handling of the situation. I like that they gave Spence time to see if he could recover, and I like that they eventually showed him the door when it was clear he couldn't, but maybe they waited too long to hit that reset button.
Yeah, I'm not quite as charitable with the board of directors here, given the management of 4. Where's the succession plan? I mean, sure, they gave Spence a whole bunch of time to try to work these things out, but given that, you would expect that if things didn't work out well, they'd have a firmer idea of how they were going to move forward after the CEO made a final bold move and it flamed out. You'd expect to have that plan B in place. I've actually liked some of the moves that Tom Conrad has made, doing his best to try to bolster up the troops, try to improve morale within the company. He's doing such a great job mending fences, trying to improve the corporate culture. So then the obvious question is, well, why do you make him an interim? Why don't you just move forward with Conrad as the permanent CEO? Just give minus points for the board, probably trying to keep all the stakeholders happy, and in the process really making none of them happy with respect to what leadership of this company is going to look like, even a few months from now, let alone a couple of years from now.
For financials, a 10 is a fortress, a 1 is yikes. Dan's at a 5, Toby's more charitable with a 7.
Yeah, the balance sheet actually looks nice here, all things considered. A decent amount of cash. Inventory looks reasonable, no long-term debt. Now, revenue's down in the most recent quarter, but honestly not as much as you might expect given all the negative press around the company. It's still profitable, still cash flow positive. There's actually a lot to like here when I look at this. But all that said, the future is still very dependent on them introducing products customers want to buy, especially customers who feel burned from the botched app update. So that is the priority heading forward.
My 5 score, I'm not going to start a big 20-minute discussion on stock-based compensation and what role it plays in determining net income. I'll just point out, I think stock-based compensation works a lot better when the stock price actually goes up. I've been a little bit concerned on the financial side. Trends not really moving in the right direction for quite a while now. And so, there's a temptation to kind of see this as, well, yeah, there was a mistake, and now we're trying to move on from the mistake. I'm a little bit worried that some of the problems are more entrenched. I am pleased to see minimal debt. I am pleased to see positive net cash on the balance sheet. What I want to see with accompanying that is growth. And if new management can do that, then my financial score will be going up. But until I see it, they're going to have to prove it to me. Going to give this relatively low score on the financial side.
All right, Dan, I'm very curious to see what your valuation is. How well will Sonos' stock do over the next 5 years? And how safe is it? Keep in mind a 10 is a sure thing, a 1 is a lottery ticket.
Yeah, I'm pretty negative on the stock. I've got a 0 to 5% return over the next 5 years on an annualized basis. Safety score of 4. I know Toby's a lot more optimistic about the prospects. I don't necessarily disagree with it. What I am concerned about is the extent to which Sonos can take for granted the consumer confidence, the loyalty that it has generated among its customers. A lot of the time, as long as the product remains high quality, customers don't really care what's going on inside the business. But some of Sonos's actions lately have been more consumer facing. And so if consumers start to lose that confidence, you might end up with this kind of spiraling situation where you get fewer people willing to pay premium prices for the product. Once that starts down the line, it gets, some much more dire scenarios start to play out. That's what I see the potential for in a relatively low safety score of 4.
I think this is where Dan and I definitely disagree directionally on this company. I went with a 10 to 15% return here. I think the stock has been beaten up really badly, and I think it is poised for a big rebound if they can regain customer confidence and loyalty. But that is a big F, and that's why I get to my safety score of 4. There's no guarantee they can turn this thing around from here. And the next rumored next product could be very compelling. So there's a reason to be optimistic, but I'm definitely putting this in the higher risk, higher reward category.
Topic time, Dan. Is there a company in Sonos' space that you like better?
Among publicly traded companies, no. I will tell you, I will wait and wait and wait as long as I have to wait. If Bose ever comes public, it's going to be worth a look for me. Not only do they make high quality stuff on the consumer side, they have expertise in technical areas too. Some of the best aviation headsets, for instance, plays to my hobbies as well. But they're not public, not directly investable. Don't really see any other stocks in this space that I'm particularly excited about.
Yeah, this was tough for me in terms of defining the space here. Sonos is targeting the high-end consumer in a somewhat niche space, right? If you want to look for direct competitors, I don't think there really is one, at least on the public company side. It is a tough business to compete in, though. I think in terms of broader consumer electronics in the audio market, maybe I'd actually go Apple. More diversified product lines, but where they really shine in the audio market is that much higher margin streaming business there with Apple Music. Sonos just hasn't gotten much traction at all with their own streaming offering. You could probably maybe throw Amazon in there too for similar reasons. But, look, big tech is very different than what Sonos is doing.
Thank you to Toby and to Dan. They've given Sonos a weak overall score of 5.4 out of 10. This one never spoke to me anyway, but then again, I'm fine listening to my iPhone with its iPhone speakers. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Neurocrine Biosciences. Till then, Fool on. I'd skip college if I had those at the right times.